In today's content, we're going to talk about Bitcoin. We're going to take a look at Bitcoin on a 50-day cycle. We're going to take a look at it on a 3-week cycle. Also, we're going to take a look at it on a 7-day cycle and down to the 2-day cycle also, okay? Just to get some directional lower degree moves. So let's start off with the 50-day cycle. Before we get started, if you're new to our content and you basically probably don't know anything about the 50-day cycle, you gotta basically subscribe, hit the likes, and join our public Telegram group so you can get these macro updates regarding BTC. Just to give you a quick recap, what is a 50-day cycle and also a 3-week cycle? A 50-day cycle, it is basically just like the monthly cycle, but it doesn't have ending. Okay, what I mean, it doesn't have ending. It is a fixed cycle, 50 days, starting January 1st to February 19th. That's 50 days. So the cycle gonna close, and February 20th we're gonna start a new cycle. Okay, so basically that's the 50-day cycle. So what we want to see on the 50-day cycle, if BTC is going to be in a bull market over the next few cycles, we want to basically stay above cycle open, right? If you watch my previous analysis, we did talk about it in details, why it is so bullish, right? If BTC retest anywhere around like a 28 to 29,000 over the next few days, it is going to be actually very, very bullish. And if you notice, well, the last couple of days, I think, not last couple of days, yesterday we did drop all the way down to where, to like a 28.8. Okay, so if you take a look at 28.8, it is actually below cycle open. The cycle open just about 29,000, but we dropped 200 points below the 50-day cycle, and you can see the massive rejection we got and retesting already 30% of the cycle pump, right? So it is very, very important. We talked about it less than 72 hours ago when BTC was actually 35,000. We said anything below 30k, 29,000, below the cycle open, it is going to be extremely bullish. Okay, the opposite is also true. Okay, closing below the cycle open, which is like 29,000 before February 19th, right? At February 19th, it is going to be very, very critical going forward. It doesn't mean we're not going to be in a bull market. It only means the potential of BTC going up further, okay, going to be very, very critical, and we're going to need like higher volume, higher volatility in order to basically break 42,000. So now another important aspect of the 50-day cycle is like the Hakkanashi. So if you take a look at the Hakkanashi, we talked about the Hakkanashi before on the 3-week chart and on the weekly, but we never talk about it on the 50-day cycle. So if you take a look at the 50-day cycle on the Hakkanashi, going back to 2015, you can see like we don't tend to make some wicks to the downside, especially after we break all-time high. So if you notice well right here, right back in 2015 when BTC basically broke all-time high on the 50-day cycle, right here, just about like 750, 720, every single cycle, okay, was actually smooth going forward. Okay, it means no tails. So what I mean smooth, it means like the bottom, right, it doesn't have any wicks to the downside. They don't give you any wicks. They just pump to the upside, bang, 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 bang. Okay, so all the way up to 20k. And if we're going to be anticipating something similar, it doesn't have to be perfect, but let's say we get 80% to 85% of the previous bull market characteristic, we could potentially say the chance of BTC giving us a wick to the downside is very low. Okay, take a look at the previous the current cycle low right here. It is like 18,000 to 19,000. So getting a wick to the downside going to be very, very crucial, right, within the next like 3 weeks. So I don't see personally, right, anything can happen, nobody knows. However, I don't see BTC basically dropping anywhere around this range. It could, but the possibility, once again, the probability of BTC breaking below 20k could be very, very low. And even if we drop below 20k or at 20k, it might be just for a second. Okay, it might not last too long, and it is going to be actually very, 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 very bullish going forward, if and only if we can basically retest it, right? Another aspect of the 50-day cycle Hakkanashi is like it tends to be very volatile. Okay, and the way I'm looking at the volatility is like from week to week, right? The top of the September 7th cycle, right? And the next cycle it was actually nearly like 48 to 50%, okay, pump. All right, if you take a look at the next cycle after the October candle close, remember we talked about October 27th, October 28th was the 50-day cycle open right here, and if we open above 11.5, 10.5, it is going to be very, very critical. So take a look at the week, we got all the way up to 20k, and the next cycle peak was also a 48 to a 50% pump. Okay, now you take a look at the current cycle we got on the Hakkanashi. It is only, guys, it is only 40%, 43%. In order to get a 50% pump, it has to basically retest like somewhere around like 44, right, to 50k. Okay, so within the next few days, few weeks, the probability of BTC basically breaking 42 and try to retest like 44, 45, just to basically keep up with the momentum of the volatility of these weeks is very, very possible. It's very, very high. So it is something like to keep in mind, and showing this is basically just showing us how bullish the bulls are, and how much they're willing to pump the price up much higher. All right, so now another thing also, most of you guys probably don't know what a Hakkanashi is. And Hakkanashi candle, it is nothing but every candle, okay, going to open right halfway through the previous body candle. What does it mean? So let's say let's say you open exactly at, let's say you open at a this candle. So okay, basically the candle open right here just about 10,000, let's say 10,000, and candle by the close at 11.5. So it's going to take the difference, it's going to take basically the average of the two. Okay, so if you take like you take the average of the body candle basically halfway through right here, that's going to be your next candle open. So for instance, right now, if we're going to want to estimate the next candle open, let's say it is February 19th right now, and we're going to open the candle February 20th, okay, tomorrow, right? We basically, okay, it is not February 19th today, okay, it is January 22nd, but I'm just want to give you guys an example, right? So it is you're basically going to open the next candle right here just about 25,000, okay, 25,000, and basically the chance of BTC weakening down to retest the previous candle open is very, very low. It's very, very low. That's what I try to explain to you guys. So now we know the 50-day cycle is very, very bullish. Now let's go ahead and take a look at the 3-week cycle on the regular candle. So if you take a look at the 3-week cycle, on my previous analysis, we did talk about something very, very interesting regarding the 3-week cycle. We needed candle actually to stay above 28, okay, 28 to 29. And if you notice well, right, we did try to close the candle below 29, but we couldn't basically do that. Okay, bears, that's what I was trying to explain to you also. Like the bulls are smart enough, right, not to let the price dip below 29 before before January 22nd, right? It was like January 21st, something like that. So you can see like we did not close below it. However, the very next candle, you can see like what the bears were trying to do by retesting the yearly open, which was like 28,999, okay, 28,999. So that's why timing is very important. Okay, we could have basically retested right here and closed below it, and that would have given us a bearish setup, which is going to be a red body, right? A red body candle right here. Which is going to be a which was going to be a red body candle with a big wick to the upside. And I said it, if we get a such a body candle, right, it is going to be very bearish. But the bulls were lucky enough to avoid a candle closing below 28,999, which was basically very, very very bullish, going forward, which is going to be very bullish going forward. Okay, so now what we want to see over the next like few days. Remember, the cycle just opened on January 22nd, and it is going to close just about like February 10th and so on, right? And something like that. Okay, very close to February 10th. So what we want to see is like at least, okay, we want to basically retest 50% of this body candle, which is going to be somewhere around like 37 to 38,000. Okay, remember the candle low was like 28.7, something like that, right? 28.8. But we want to basically retest 50% of this wick just to keep up the momentum. We do not have to basically close above the 42 before like February 10th, something like that, right? But we just want to basically keep up the momentum and try to retest this area. And before February 19th, which is going to be the next 50-day cycle open, we definitely could possibly pump above like a 42 and so on. So a 3-week cycle, it is still extremely bullish. Let's take a look at it now on the Hakkanashi. Okay, so if you take a look at it on the Hakkanashi, we could be very bullish, like looking at the trend. As we talk about the 50-day cycle, we said these 50-day cycle tend to pump like on the Hakkanashi 50% above the previous week. Okay, but if you take a look at the 3-week cycle on the Hakkanashi, we tend to pump like nearly 25, right, to 30%. Take a look at the next one, it is almost like 22, right? So the next cycle we pump just about 18, 20, right? So, and this one, the previous one we pumped nearly 43%. So the average is above 20%. Okay, so if we're going to be expecting, okay, within this cycle BTC to basically pump a nice 18%, okay, above the previous cycle, that could potentially take us all the way up to 50K. Okay, if we're going to keep up with the trend. So if and only if we're going to keep up with the trend, we could potentially see a 50K BTC based on the volatility of the 3-week cycle. I don't expect it. However, that's what the trend is saying. All I want to see, right, personally, my personal bullish bias is like just to retest, right, 38. Once we break above 38, we basically gonna get a higher chance to retest like a 44 and 50K based on the Hakkanashi 3-week cycle. Okay, so now let's go ahead and take a look at the 7-day cycle. The 7-day cycle on the regular candle, what we said previously was like candle gonna close very shortly, right? And actually, let's take a look at on the weekly first. What we said on the weekly, our previous update, we said the weekly is still bullish. It doesn't matter if we drop below like 30K and so on. Most likely it is going to get bought up very quickly because the 50-day cycle doesn't want to stay below 28. Okay, the 3-week cycle didn't want to close below 28. So one of the reasons why we basically pump right back up. Okay, we pump right back up after we retested basically 28 to 29K area. So now it is still bullish. Okay, we could still get another red candle over the next like a few days or next week, right? We could still get a bearish candle, which basically going to give us another lower low, but it is just going to be short term. Remember, we got the 3-week cycle, okay, which is 21 days. The 7-day cycle, it is only 1/3 of the 3-week cycle, and it is not even like 20% of the 50-day cycle. So a weekly candle on the 50-day cycle, it is nothing. It is basically very small. So basically a retest of 28 again going to be a big opportunity for most bulls to buy the dip, because they know, guys, the 50-day cycle doesn't want to stay below 28K. Okay, it doesn't want to stay below 28K over the next 3 weeks. So anything below 30K got to get bought up very quickly based on the 50-day cycle and all of that good stuff. So now let's take a look at the 7-day cycle, which is basically different with the weekly cycle. The 7-day cycle starts like January 1st. Okay, it doesn't matter if it is a Monday or Tuesday, whatever. Okay, 7-day cycle starts January 1st. The next cycle starts January 8th, 15th, and so on, right? So you can see like right now we just opened a new cycle and retested the previous cycle low. Remember, the 50-day cycle is right here, started right here. On the 7-day cycle, we also, because we're still within the 50-day cycle, retested right here. If you notice well, we just opened yesterday candle, right? On the 22nd, this candle opened on the 22nd. It wicked down to the yearly open. Okay, we did not retest yearly low. Remember, yearly low is very, very important. Okay, BTC loves to retest yearly low, but it was quite, close enough. We talk about it like after the first candle. After the first candle of the year, I talk about how important it is like for BTC to stay above yearly low and above yearly open. Okay, very, very important. So yearly open, once again, 29,000, yearly low 27,700. So this range, it is going to be a bull territory, guys. I don't see, once again, I don't see the bulls, okay, trying to lose control of 27 to 29,000 over the next like 3 weeks at least. Okay, at least over the next 3 weeks, we got a good chance any dip in this range going to get bought up very, very quickly. All right, so basically, once again, 7 days chart still bullish. Okay, now let's go ahead and take a look at the good stuff right now, the low volatility cycle, which is like the 3-day cycle. If you watch my previous analysis regarding the 2-day cycle and the 3-day cycle, we're gonna start off with the 2-day cycle because it gives us a better view and a higher volatility, right? You take a look at the 2-day cycle. What we said was like BTC could drop down to the 21 EMA right here, right? But it is most likely going to get bought up very quickly. Okay, it is most likely going to get bought up very quickly. Remember, the 2-day 21 EMA was at 30,700, which was our target. Okay, we said we can drop below it, but it is safer, okay, to start like accumulating at 307. If you start accumulating at 307, anything below it, it is not going to stay there too long. Okay, and that's what happened exactly. Okay, so we dipped all the way down to 28.8, did not even retest 27.7, which is like yearly low, and bounced right back up above 32, 33 area. So basically the 2-day cycle, it is still very, very bullish. And if we want to take a look at our MACD on the 2-day cycle, we're saying it is partially bullish, partially bearish. Okay, so it is partially bearish, just about, I would say 25 to 30% bearish, just because we got our MACD crossing bearish. And why am I still 70% to a 75% bullish is like, as long as we staying above the 2-day 21 EMA, okay, regardless of what happened, okay, as long as we staying above the 2-day 21 EMA, the likelihood of BTC pumping to the upside is very high. Okay, so we could potentially see higher prices, okay, as long as we staying above the 2-day 21 EMA. But it means MACD has to cross bullish again, because we cannot stay above the 2-day 21 EMA and making higher highs without MACD following price action. That way, price action going to dictate the direction. But as of now, MACD is forcing to dictate the direction, but it could change very quickly. If you remember right here, back in December, right there, what we said was like Bitcoin, okay, MACD crossed bearish right here. Okay, however, our price action did not cross bearish. Okay, that was a second retest right here. Okay, we did not even break below the 21 EMA. Breaking below the 21 EMA going to be bearish. We did not break below the 21 EMA, and price action basically took control and basically forced the MACD to cross bullish again, and we took it to the upside all the way up to 42,000. So if that's the case, guys, remember, we're just gonna recap it. Okay, we're gonna recap it. Right, what we're saying is like we're expecting BTC to pump all the way up to 50K. Okay, potentially looking at the 50-day cycle. Okay, and right now the 2-day cycle is partially bearish, right? And if the direction changes, right, on the 2-day cycle, and the 2-day cycle forces the MACD to cross bullish, that going to basically facilitate the momentum on the 50-day cycle, right, to basically try to close higher. And even next cycle, which is going to start on February, just about like February 20th, it could potentially give us a big pump to the upside above 44 or higher. So let's just keep that in mind. Every single cycle from like 50-day to 2-day time frame, it is still bullish on BTC. Okay, only the lower degree, like 6 hour and lower, is kind of bearish slightly, right? Not even that strongly bearish, because we below the we just below the 21 EMA on the 6 hour, right? MACD, it is still bearish. So that's the only bearish sign I see on BTC, okay, 6 hour and lower, but anything above you know, daily time frame and all of that good stuff, it is still bullish. Okay, the daily, you could argue it is bearish because price action, it is still below the 21 EMA. MACD, it is still crossing bearish. You could basically include the bearishness, right, of the daily you know, daily time frame into the you know, the bearish setup. So I would say like daily and down, it is slightly bearish. Okay, and you know, 2-day time frame and higher, it is still very, very aggressive and could basically pump the price up. They could basically keep up the momentum and pump the price up to some higher prices. Okay, so what we need to see on a daily basis, basically it is pretty simple. We want to just see a bullish crossover and price action above the 21 EMA, and we could see a higher prices over the next like a few days and so on. All right, guys, that's all I wanted to cover for today. So if you're new to our content, if you find the content useful, don't forget to hit the likes. Don't forget to join our public Telegram group, link in the description. If you're looking to join Send Crypto Premium, you can definitely you know, join, upgrade to my, you know, premium group, you know, where we trade BTC, you know, Ethereum, altcoins, and all of that good stuff. All right, guys, thanks a lot for watching.